This is a quick snapshot. Pancontinental is an ASX-listed company with a long history as a sort of proud explorer, frontier areas in Africa. And like many companies, fallen on hard times without, I guess, a plan B to rely on earlier this year. At the start of, or about midway through last year, I'd approached my supportive broking firm Hartley's in Perth about the idea that if we put the right set of assets together, 2017 might be just the right year to take advantage of building an oil and gas company. So we've gone about that. That shows the current market cap there of 26 million. When we signed the heads of agreement to combine the companies in June this year, Pancon had a market cap of 4.9. When their shareholders approved it in 10th of July, just a few months ago, a market cap of 9.6. And here we are 3 months later with a market cap of 26. So it's small, but it's not a bad trajectory. And we've come from a low base, and we've got ambitions to take it a lot further. More recently, we did a deal to sell a portion of our interest in a project in offshore Namibia, where we had a 30% carried interest in partnership with Tullow on a big offshore oil play there, and we sold 10% of that for $7.7 million in cash. So in the period from taking the company where it had, I think, less than $1 million in the bank, we've effectively brought in about $17 million of financing over these 3 months and taken the share price from 0.2 at the deal to 0.5 today. That's the timeline of events. I think I've pretty much just explained that. The deal was to bring in, balance the portfolio with the high impact frontier exploration in offshore West Africa, with projects where there was a lower subsurface risk, chasing gas, onshore California, near markets. Effectively tied up a bunch of projects that are existing gas discoveries requiring appraisal near the second largest domestic gas market in the world. Getting back to what Pancon does well, basically historically and now, we're specialists in getting in early, identifying a play that's unloved or underrated, doing the homework to build it up, and then creating partnerships that do the breakthrough work to create commerciality. That's what we've done time and again. And we have 2 fully funded wells going down in California at the moment. One's a gas discovery being tested, and another one about to spud on a big high pressure untested gas discovery will start in about a week's time. Now that combined with what we have with the PEL 37 project in Namibia, basically we've got other companies to spend on our behalf around about on a 12-to-1 basis. For every $1 million we've raised out of our shareholders, somebody else is paying 12 towards the projects that we're in. History of taking these projects from the idea to getting them drilled and into production. So a little bit of past history from myself there, a project called Bass Gas in the Bass Basin of Australia. Right now we're testing a well in the Sacramento Basin with a group of entrepreneurial Aussie companies that we think we're going to open up this whole deeper part of this historic producing basin that's produced 11 TCF, thousands and thousands of wells drilled at that level, and 16 to the level where the gas is coming from. In addition, I mentioned Namibia there. We expect to be drilling there in about 9-10 months' time. What does it mean? Our net exposure potentially on a sort of best estimate basis to these prospects, the one that we've just made a gas discovery in called Dempsey, we have 10% there. If everything went according to plan, there could be about 78 BCF of gas net to us. Now, if you want to do some money metrics, some very simple money metrics, all my numbers in this presentation are in Aussie dollars. You could say $1 million Aussie per BCF. So from a 26 market cap, those 2 circles up the top there, those 2 projects we're drilling right now, testing one and about to drill the other, could easily take us from 26 market cap to something much, much greater. In the meantime, we have the strategic opportunity in Namibia where our net exposure to the the best estimate prospective resources for oil in a group of big fan plays that people love to drill in West Africa is truly enormous. So our idea was really to try to balance this off, take out our dependence on oil risk, oil price risk, get into gas, at the same time give our shareholders multiple shots at it. And we're determined to build our position in both regions. So it's a portfolio approach where we're trying to take out the subsurface risk as much as we can, and also some of the commodity price risk. Just so you know, here's Namibia over there on the left-hand side, and what we know now is you don't have to sort of believe me when I say that Namibia is one of these places that the majors are interested in, because since we did the deal, we've seen ONGC Videsh, the giant Indian company, farm into our block for a 30% interest. Subsequent to that, we sold, as I mentioned, a portion of our interest for cash, and more recently we've seen Total come into the south. Now, I would say to some of the speakers earlier this morning when they were talking about offshore or deep water exploration, that a deep water project, a big volume deep water project of 100 million barrels plus, in a good fiscal jurisdiction that has a great reservoir, will spank the economics of a second-tier shale play in the US. And that's why the bigger companies around the world are positioning themselves in certain places. And we expect, in due course, that ExxonMobil will arrive on this graph in the not-too-distant future. California, there's a map of California. It's gas in the north and oil in the south. You can't believe how much hydrocarbons have been produced there, and you can't also believe how tired that industry's got and how an injection of new ideas can make a big difference. So we're right up in the north. That map there then shows the northern part of the Sacramento Basin, 11 TCF of gas produced from the shallower levels, and we've moved in there, with, as I said, to appraise existing gas discoveries. A little bit more information. I'm assuming I've got this out of order, but that's what we're drilling in Namibia. You can see it over there. It looks small, but it's that fan feature is one of a series that are all mapped here, and it's 120 square kilometres. So no wonder that if you get a decent reservoir and you get the oil into it, you know, you can find 100 to 250 million barrels per prospect. And that's what got Tullow, our operator, and these other major companies excited. Here's the prospect in California we're drilling. That structure on the right, any geophysicist anywhere will map that up as a ripping looking structure. And you know what? We were the first group to drill to these levels in the basin using 3D seismic. So we have the advantage of the breakthrough technologies, and of course we drilled down and we found gas in every single level, and we're about to test from the bottom up, and it just remains to be proved whether the reservoirs will flow naturally or they'll need some help. In addition to that, over the page, this diagram doesn't do it justice. This is an absolutely enormous anticline on the edge of the basin, the edge of the fold belt. We're partners there with CRC. They were California Oxy. They're the biggest, one of the three big producers in California, producing around about 150,000 BOEPD. And we're farmed in. We're paying for this well to go back to the gas reservoirs they saw in a 2015 well that they couldn't test for mechanical reasons. We would never have got this project except in this current industry environment. This project should have been something they would drill with their own discretionary cash, but of course they're limited to drilling on development and appraisal wells on their existing oil fields, because that's the fiscal controls that are on them at the moment. So a little company out of Australia has come in, partnered with the biggest onshore producer in California on a simply enormous anticline. We've got other projects on trend which we've locked up. We've looked at there. For those of you who are not technical, on the left, that's a gas column, 138 feet in an old well, on trend in a very large structure like Tulano, never tested. We've looked at it with our reservoir engineers, and we think the rocks in there are capable of flowing, according to this graph down here, at very good rates if treated the right way when you drill them. So it's kind of a strategic resource. If we go well in these other two wells, then we have this one as backup. Okay, final slide. This is Pancontinental. I mentioned the market cap growth. Sure, 26 mil is not a big market cap. It's not enough to get a lot of you people excited, but it's a long way from where the company was, and it's a fair way in a few months. And my seed investors are up nearly 5 times, and the people who put money in when this deal was done from Pancontinental after 18 months of misery, they're up 250% in 3 months. So we want to keep that trajectory going. We find that we have the skills to get into these places and do these deals even when the industry conditions and the belief in the industry is very low. That's our story. Thanks.